Trading is not an easy thing. If you're trading and investing time and time again, sometimes some of you may see you enter into a trade and it goes down. You get out of the trade, you go the other way, and it goes against you. This is happening over and over and over again. You buy, you're listening to news, you're listening to an analyst. They tell you this is the bottom. Time to invest. Let's get it. When you invest, you notice it keeps going down. And you get so frustrated that you sell out and then it goes up. Are you tired of this? This has happened to me. Years ago, when I first started investing and trading, I had some of my biggest and greatest losses. I did not know what I was doing. I would hear all these people talking about how much money they were making, but I saw I wasn't making any money. It just got me so frustrated and down, depressed. One of the things that I learned, and I'm going to tell you guys, is this. Trading and investing is 95% psychological. Psychological. If you're committed to your own analysis, follow your analysis. Times and time again, when I first started trading again, I would have my profile of what was going on. I would have my understanding, my technical analysis of what my trade would be. And I would be following it, and then I would hear someone else that had years on me of experience. Their analysis was in the opposite direction of mine, and I'd get out of mine, and it'd go away from me, going up a little bit, but then it would go all the way back against my position that I followed from the expert. And if I had stayed my position, I would have left at a profit. Guys, I want to tell you this. Trading is not easy. It takes time. This is something that you have to learn and educate yourself with every single day. Technical analysis, volume, which is price action. Because technical analysis, your exponential moving averages, those are all lagging. So the real up-to-date indicator of where a trade, a stock, a crypto, an indexes, a commodity is going is volume, price action. And then you can have your Bollinger Bands, your exponential moving averages, or looking at the Fibonacci levels and all of that. The other thing that you must realize is that fundamental news causes an impact upon where your trade is going. What the Fed chair may be saying, war that may be occurring, all of this. So you're educating yourself all the time. The time of day that you trade, whether it's New York Open or London Open where it's more volatile, or you wait a little bit after for the market to settle down, create a trend so you know exactly where you're going and what you're doing. Even some of the more experienced, successful investors and traders say that they learn every single day. Some of my losses, I remember when I first came in and I funded up my account about $50,000 just to blow the whole account. First it went well. I made $4,000, another $4,000, another $16,000. Thought I knew it all. Went in and was carrying a trade, did not get out of the trade. Then it drove all the way down within minutes, taking me out, killing my account. I funded up again. The same thing happened. Funded up again. The same thing happened. Months went by. And then I started to say, I need to learn. So I educated myself. I took 6 months off educating myself. Came back, had some nice wins, but then had losses again, blowing an account again. It wasn't until about a year later that I started making consistent results, consistent wins, consistent profit. And how I did that was understanding that I had to educate myself. I had to put out my own technical analysis. I had to follow that technical analysis. I had to have stop losses. I had to know when I was going to get out and when I was going to cut a trade or when I was going to take my profit. I learned not to get too greedy. Couple pips, couple bucks per trade is fine with me because it all adds up. And I don't spend all day trading. Another problem that I had was when I first started investing in trade, I'd be glued to my computer all day long. Sometimes I would be locked in for 2-3 days in my room, watching the trade, hoping that it would go back to profit. Many times, which it never did, the market makers just drove it down until they wiped me out. So one thing I also learned is that when I trade, I'm going to get in and out. I'm not going to spend all day trading. There's a thing called trading too much. You make enough money, get out, call it a day. Because the more greedy you become, what the market gives you, the market takes away. So these are all things that I've learned and things that I continually learn. And then I have journal and I have to tell myself, you have to make sure you follow your rules of trading. Proper lot size. Do not over lot size. Do not over trade. When you are taking a loss, cut it. And then you can go ahead, assess the market and go back in where you can identify a trend, which is always the safest, whether it's a trend up or a trend down, 2 or 3 trades, 4 trades for the day, and you're fine. If you can do 3 or 4 trades every single day that you trade, it adds up after a month, after 3 months, after 6 months, after a year. So that's my advice. Always educate yourself, always learn, and always follow your trading regimen.